All right, most of the experts are still, shining their crystal balls at this point, looking deep to find out what's next, for this second half of 2025. We've been through the first half, and definitely a lot of things have happened so far. We see commercial partners there. They present an outlook that's for the second half of 2025, providing a comprehensive analysis of key macroeconomic trends, sectoral performances, and policy challenges shaping Nigeria and the global economy in the second half of 2025 against the backdrop of slowing U.S. growth, volatile commodity markets, and Nigeria's ongoing structural reforms. This report highlights both opportunities and risks for investors, policymakers, and businesses. Well, joining us to unpack this now, we have Dr. Fanyi Uba as the head investment research at Commercial Partners Limited. Great to have you on the show. Good afternoon.
Good afternoon. Thank you for having me.
Yeah, so, definitely quite an interesting one at your recent Outlook event. So a lot was, talked about, from the global economy to the domestic economy, and definitely we know things that happen outside also have a way of impacting the domestic economy. So let's look at the global side of things now. Do you think the U.S. economy will maintain, resilience, despite high public debt and, demographic pressures we're seeing so far? We know President Donald Trump did visit the Fed, yesterday, and, it was quite an interesting one there. He was talking about how much the Fed has spent so far in renovations, and we saw Fed Chair Jerome Powell there saying that, okay, maybe the figure is not so right. So how are you seeing all of that play out?
Well, so the U.S. economy has definitely been volatile, and that's what we expected leading into the first half of the year. And what we do know is that the markets are now becoming less responsive to tariffs fears and becoming more resilient. We saw a huge plumb starting with Liberation Day, but we saw a massive recovery around April. So this plunge was also supported with somewhat of a negative GDP. But when you strip the GDP out and look at core data, you still see a lot of resilience as compared to other plunges like the COVID-19 and other like. So we don't expect the US to actually enter a recession predicting a 1% target. And, it's going to be very hard for the Fed to actually achieve their 2% target for inflation, and we see inflation still inching up and as a little bit stubborn. So what we expect is a one rate cut, if any, but we understand that the the integrity or the independence of the Fed is now being called into question, particularly because of Donald Trump's rhetoric around the Fed chair. So we expect all these things to add a little bit of volatility, but the trajectory of the US economy is still resilient and still going up.
Right. And, looking at the interaction between the U.S. president and Fed Chair Jerome Powell, yesterday you could feel that tension between them.
Definitely.
But what's the worst that can happen, at this point? We've gotten repeated calls there from the U.S. president that, it's time for Jerome Powell to step aside. He needs those rates. He needs the rates cut immediately at this point, and definitely Jerome Powell is not having it, at this point. So what's the worst that can happen if Trump somehow gets Jerome Powell out of the way at this point, either by firing, because we heard he can't just fire the Fed chair, at this point. Maybe the Fed chair just resigns. What happens? What's the worst that can happen?
Well, I don't think the Fed chair resigning before the end of the tenure is going to put a lot of confidence to the market. What I expect him to actually use his entire tenure, because any interference from the president or somewhat seen as interference might add much volatility to the market that is unnecessary. So the dot plot from the Fed shows at least one rate cut, and the market participants are still expecting at least one rate cut. So we still feel that if inflation trends downwards and respects data, we might see an easing from the Fed. But regardless of who is in the seat, the Fed is supposed to be a neutral party and focus on data. And we understand that politics and it might not, the data and the policies of the Fed might not fit into the politics of the time, but the neutrality and the independence of the Fed must still be upheld because the United States is an economy that should not be seen to cut corners when it comes to the economic outcome. Because even though the Fed cuts rates before he thinks it's time, it's just going to be a small bandage and there's still going to be a cascading effect. Our outlook actually shows cracks, shows massive government spending, and sees that the non-farm payroll has actually been declining massively, and not necessarily massively of the total numbers, but when you strip it down and look at private sector employment and government sector employment, when you see a decline in private sector employment, it is overshadowed by the 5 times increase in public sector employment, which is employment from the government. So we have seen that usually the government spends more when there's a recession, but according to our analysis, the government is not waiting for a recession and has continued to balloon the economy. Yes, this means asset classes will be priced higher, but it's a bubble that is waiting to burst.
All right, so definitely, I think coming into 2025, I believe the projections were about maybe 4 rate cuts, from the U.S. Fed, in 2025, about 4, maybe 3. But now, I believe consensus is a single rate cut, at this point, and which will
Definitely.
come in the fourth quarter of 2025. How would this impact emerging markets like Nigeria? Just one rate cut.
Well, if the CBN continues to maintain rates like it should, as we have not seen we would like the Naira to keep on appreciating, we could see foreign inflows as if there's a rate cut in the emerging markets. Foreign investors will look for emerging markets to get higher returns, and we are having double-digit returns on some of our euro bonds, and our dollar funds are performing like magnificently well. So I expect I expect there to be more inflows into emerging markets that have a little bit of stability, like Nigeria, and are offering higher returns because capital will definitely move where it can make more.
All right, let's look at the US dollar at this point. I'm sure we've been tracking the DXY, that's the dollar index. And do you see a rebound? I know we dropped a sub 100 points there for the DXY. Do you see a rebound to maybe 100, 102 for the
Yes, we
index
definitely
coming?
see a rebound. We definitely see a rebound in potential. Technically, the dollar definitely has bottomed out, and like I said, the economy is looking at a resurgence. So, it's kind of abnormal to see this kind of massive long-term trend against different assets. So, especially if there's actually a rate cut in the fourth quarter. So we definitely see a rebound from the DXY. So that would definitely affect other gains that have been made by other currency pairs that have high trading capacity with the dollar.
Right, let's look at the domestic economy at this point, and we've seen a lot of targets there. When it comes to GDP, when it comes to inflation. What are you guys seeing? For the second half? We've been talking about that 5% GDP growth target. There's a lot of structural constraints. At this point, how do we achieve that?
Well, after seeing the GDP prints, this 5% GDP growth was for our H1 as a post-rebase figure. After seeing the GDP prints, if you notice, unlike the inflation, they actually traced it back to as far back as 2019, so you could get side-by-side comparisons. Because if you look at it on a nominal scale, it actually ballooned close to 100%, which would have been ridiculous to put out those numbers. But tracking it far back as 2019 and doing the rebase figures like that give a little bit of clarity to where we're going. So we actually revised our numbers to 4%, but ideally 3.6% would be where we might see ourselves if this growth trajectory is continued by. by Nigeria.
And I see your inflation target there projected to fall to 15%, 15 to 20%. What do you, is it the type we're going to feel, when we go to the markets, from this projection?
Yeah, so the inflation target was actually almost spot on. June inflation was around 22.2, so that is like 2.2% off. And this is coming from an inflation figure that was around 33. So although we see that there might be some volatility, our best case scenario is that we probably might see a 20 or a 19% at the end of the year if we still maintain this hawkish stance. But there needs to be a consensus between the fiscal and monetary policy because the CBN is doing its best to actually contract the amount of money in circulation, but we cannot say the same for the fiscal policy as we have seen lots of liquidity flood into the market in terms of FAC allocation, one of the highest we've ever seen, 1.7 or 1.3 trillion loaded to the economy, and this must find ways to grow. And this trickles down to gradual higher prices. But barring all that, we still feel that inflation will moderate as soon as possible.
All right, let's look at the Naira now. I guess your forecast is 1.7 to the dollar. Am I right?
Our forecast, that was for mid-year, and that was actually hit. We got to 1.7, but right now, for the end of the year, we expect the Naira best case scenario to hit around 1.4. We have seen added appreciation to the Naira, so we expect the Naira to hit around 1,400. So we still expect some appreciation to the Naira, particularly because the CBN has maintained this hawkish stance. And after the huge increase we saw in interest rate, he has decided to keep all rates steady. And we think this is how he will continue going forward.
Right. All right, let's look at some markets now. A couple of asset classes have hit prices we have never seen before. If you're looking at the NGX, if you're looking at the price of gold, if you're looking at, Bitcoin, you're looking at a couple of asset classes there hitting new highs. I guess we can call 2025 the year of new highs, at this point.
Yeah, so definitely we have seen like this although Nigeria is kind of decoupled from the global economy, but we still saw some resurgence, and Bitcoin saw this inflow of institutional money. This was an asset class that was trading around 70,000 within this year, but now we saw it go as high as 110, 115. So we're definitely seeing this. But one thing that is particular about this Bitcoin rally is that it has actually come with the lowest volume. This is a signal that this asset class is not looked at like a Ponzi scheme narrative, but more of the institutional money, the BlackRocks, the Vanguard, are increasing their holdings. And this stable capital, these are people that will throw this money there and wait for 10 years to get this 1,000% return.
So what next at this point? Do we see these new highs continuing when you're looking at the NGX All Share Index? Do we see this continuing in this second half of 2025? Or is there some kind of black swan event that could just, trip everything?
Well, the reason why it's called a black swan event is because it's highly unpredictable.
Exactly.
But all cards are that this rally would still continue as a rate cut is being expected and already priced into the market. We expect more favorable numbers in terms of GDP and unemployment as the government keeps on ramping up spending even in the domestic and in the external market, in the US market. So we still expect a little bit of rally. Something to watch out again is for the repricing of the gold in the US reserves. There are so many talks about that. And if that happens, we see asset class move up massively. I think they are like around 8,000 gold bars in the US reserve that have been priced to around $45. So rumor has it that we are seeing a repricing and could go as high as $15,000. If we right now gold is trading around $3,300. So having that kind of massive move will mean acceleration of all asset class and a robust reserve for the United States. So we have so many things that could happen. but in the world, we might see the economy to be recursive rather than predictive, in the words of some economists.
Right, and looking at gold, we've seen a new high for gold. Technically, even though we've seen a pullback from there, and we've seen countries like Ghana, actually profit, from this gold rally. Do you think Nigeria was kind of left out? I know we also produce gold.
Well, yeah, so Nigeria definitely did not see the massive effect as, like Ghana is Gold Coast for a reason, right? But one thing we did see in our outlook is that there is a shift from the global dynamics. The talks of the Bretton Woods 3 is now becoming top of the conversation, where we see a multipolar world and commodities living the day. So our arable lands, the water, and other commodities are actually things that we see might have long-term potential. Think about cocoa, for instance. Who knew how much rally it has done for the last 2 years? This was an asset class that did almost 200%. So there's so much potential, and it's not just gold. The commodities are waking up again.
Definitely still watching out for how these asset classes continue, in 2025. Thank you so much, Dr. Ifeanyi Uba, the head investment research at Commercial Partners Limited. Thank you for joining us today.
Thank you for having me.